Hello and welcome to CMC Markets Trading Outlook for the week of March the 7th, 2016. My name is Colin, Chief Market Strategist. This week we're going to do a preview of the ECB and Bank of Canada meetings, and I'm also going to take a look at some of the really strong base building patterns that we've seen emerging in world markets of late. It's fairly quiet overall for economic news. We've had a lot just come out, including U.S. non-farm payrolls, which was a mixed report. Payrolls were better than expected, but a lot of people were disappointed with the wage growth and what that might mean for inflation. So we've got a mixed response to that as well. However, this week now we're moving in the focus shifts a little bit from the Fed over to the ECB with their meeting coming up. We also have a Bank of Canada meeting. And there are a few other things going on. The week kicks off with China over the weekend is having a big political meeting, and at which they're supposed to release their 2016 forecast. So that could have an influence at the beginning of the week. On Monday, we have speeches from FOMC Governors Stanley Fischer and Lael Brainerd. So both of them, they're both permanent voting members. So their comments could attract some interest and more speculation on where the Fed is heading. We also have another big week for primaries with a number of states on Tuesday as well as on Saturday, and also we have a central bank meeting also for the RBNZ this week, the Reserve Bank of New Zealand. So that's another one. So three big central bank meetings. Of the three, the ECB is the main event, and I'll start there. And I'm going to start with euro dollar. So what we're looking at with the ECB meeting is they've been talking for a long time that they would continue to review their quantitative easing and that they could do something in March. Well, March has arrived, and now the street is waiting to see what they're actually going to do. We'll recall back in December here, from October through to December, the euro got hit pretty hard, falling from 115 down to 106 on speculation that the ECB would come in with some big heavy new stimulus. They didn't come in with as much as as people had thought, and we had the big spike on the meeting consolidation. We've had another move up of late with when the US dollar started to weaken a little bit. We've seen some speculation come back in, but overall we're not seeing quite the heavy levels of speculation on big ECB stimulus that we saw 3 months ago. The street is expecting another cut to deposit rates, but there are some concerns about whether the ECB could go deeper into negative interest rates, what that could start to mean for the banking sector, and in general what that means, that if they have to keep bringing in more and more stimulus, how weak is the economy. Some European data has gone from generally dismal to more mixed. They are seeing some benefits kick in from the lower oil prices, but is it enough or is it too little too late? It remains to be seen. But I do figure that you'll see a fairly sizable move in the euro dollar in either direction, depending on whether people are happy with the level of stimulus that they got or disappointed with the level of stimulus that they got. More stimulus would be likely to drive the euro dollar down, and less stimulus would be likely to drive the euro dollar back up. So it's been holding here above this 108 level, 107.90. A Fibonacci test channel support has come up there. Look at these couple nice little hammers here, and now starting to bounce back up. It's also breaking out of a short-term downtrend, and RSI looks like it's peaking back above 50. So this doesn't sound to me like a market that's expecting huge amounts of new stimulus. If anything, it's a market that is probably reflecting the U.S. dollar backing off a little bit as some of the speculation on whether or not the Fed will raise interest rates later this month or not has eased a little bit following the mixed employment report. Euro in general has been mixed relative to other markets. I'm just going to show a couple of other ones. I'm going to show Euro Pound and Euro Yen. So Euro Pound here has, Euro's been struggling against the U.S. dollar, been doing spectacularly against the pound. Look at this. It's rallied up from 69 to 79 over the course of about 3 months. It's now looking like it's showing signs of topping. Big negative RSI divergence here, struggling to hold above 79, starting to slip back. It fell back. It stabilized here in the 77 to 77.90 range, but this does look like it's trying to break down here. Maybe you might get a rally back up again. You could be carving out a head and shoulders top here. It's hard to say at this point, but there are signs that this might be starting to peak. Why could this peak? Well, a lot of this rally was driven by particularly, and the initial phases were driven by a recovery in the euro. This later phase here was driven by concerns over the Brexit vote. I think that whole thing's been overblown and has washed through the markets, and we could be starting to see a changeover with sterling starting to recover relative to the euro. The also, I said I would show euro yen. And what we're seeing here with euro yen, interestingly, is look at this. This is a nice basing pattern here that's starting to emerge. Let's bring it up to 3 months. And look at this. So you're seeing a nice saucer bottom here. You've been oversold on the RSI. That's starting to ramp its way up. And you're breaking out of this base here over 125, signaling you're starting to turn upward for the euro again. Another sign that this stimulus speculation is starting to back off, especially because these are two areas with the ECB and the Bank of Japan that both have negative interest rates. So clearly people from here are starting to think that the ECB may not be quite as stimulative as they had thought. So that's something to keep in mind as we head into the upcoming meeting as well. I'm going to move on to the other central bank meetings for this week. We'll start with the Canadian dollar. I just want to start out by showing CAD US, and then I'll flip this over here. But look at this. This has been quite a recovery for the Canadian dollar here. Huge declines. Then after the about mid-January, the Canadian dollar has been steadily recovering. What happened 3 months ago? The Bank of Canada did not. This last phase down was not only oil, but there was also a speculation that the Bank of Canada would cut interest rates again. They didn't, and we've seen the Canadian dollar steadily recover since then. This recovery has been generally positive. I mean, it takes away some of the disappointment and despondency about the economy in Canada and increases some optimism, which is good. But it hasn't rallied so much that it would cut into the advantages of the lower loonie that the loonie has had, attracting more things like film production, more tourism, is better for exporters. So those benefits are still there, but it's not quite as with the loonie's not quite as depressed as it was. So it's come back up here. It's leveled off in this 74 to 75 range. This is 76 up here. That Fibonacci cluster is 74.25, 74.50 or so. It has gotten a little overbought on the RSI here, so it does look as like the Canada is leveling off. Now, the question is, what's the Bank of Canada going to do this week? Likely nothing. Nothing once again. It's not looking like it. Why? Because Canadian GDP is actually starting to turn around and pick up, and this shows it here working down. We're in and around 134, 133 here for dollar CAD. Getting oversold though, so we could see it continue to trend sideways in the short term. But overall, Canadian economic numbers have been improving, particularly the GDP reports. And the employment reports have been okay. So there's no reason at this point in time for the Bank of Canada to cut rates any further. And similarly, while Canada is continuing to work through this transition, and with the loonie having rebounded the way it has, there's no reason for the Bank of Canada to raise rates either. So it's likely to continue sitting on the fence. Let's now take a look at the Kiwi dollar, since they also have a central bank meeting this week, and the Kiwi dollar is just starting to break out here. We've seen overall it's in a sideways range between about 64 and about 69. More recently, it's been trading in the 65.60 to 67.70 channel. Breaking out of that, could take a run up here at 68.70. The Reserve Bank of New Zealand is not expected to do anything either on rates. They cut rates 4 times over the last while, giving back basically the 4 rate hikes of 2014. They took them back in up to their last meeting, so up to January. So they're not expected to do anything here. If the U.S. dollar continues to weaken, this could take a run at 68.70, 69 again. But if we do see it start peaking above this in the run up to the meeting, then you could see more of a threat from Governor Wheeler against the currency. Don't forget the RBNZ has intervened in forex trading before, and if we see the Kiwi dollar if they start thinking the dollar is getting away on them, they could start to talk it down, perhaps more, and the higher it goes, the more aggressively they may try and talk it back down. So keep an eye out on that. That'll probably be volatile in and around the meeting as well. As a general thing, I wanted to highlight some of the base building patterns that we've seen. I've shown there's a breakout in the Kiwi dollar. I've shown the recovery in the Canadian dollar. I also just wanted to show a couple of Aussie dollar, and I'm going to show sterling as well. Look at this Aussie dollar pattern here. This is another very strong base building pattern, breaking out over 74. If we move this line up here a little bit, we've broken out of our over our 200-day moving average and broken out of an ascending triangle base here. So that's a really strong base building pattern in Aussie dollar, now complete and is starting to turn upwards. Let's come over here and take a look at Texas crude oil. Oh, sorry, I said I'd do sterling first. Let's do cable first and finish that off. So look at cable. What have we got here for cable? It's at least stabilizing. I showed it topping out against the euro. Here's sterling against the dollar, massively oversold. No new low here was not confirmed by the RSI. Positive divergence tells you negative downtrends nearing exhaustion. It's starting to really climb up out of this base as well. So this is 140 it cleared 140.80, and it's still rolling. This is now 142.10. This 50-day average here 143.75. Let's move over and take a look at crude oil. Look at this beautiful double bottom base here. A big sell-off, 1, 2, climbing, and now it's breaking out of this base as well. Confirmation, upward confirmation by RSI momentum as well. Very strong turn upward for crude oil. And I'll also show copper here. Look at this one. Oops, sorry, wrong chart. Here on copper, look at this. What a beautiful base. Left shoulder, head, right shoulder, neckline, explode, and it clears the neckline and explodes to the upside. Yes, it's getting overbought, may need to trend sideways over the next week, but beautiful base building forming here in copper. And if we move now to some of the indices as well, we're going to see nice strong bases forming in the indices as well. Look at this. Nice double bottom, W base here, double bottom, breaking out, clearing the 50-day, retesting the breakout point as new support, and exploding to the upside. So very strong action in the US 30. Let's also look at the SPX. And here you had a lower low, you have a higher low in the RSI, non-confirmation, positive divergence, told you the downward momentum is slowing. This is actually the Russell, my apologies. Russell 2, and then look at this, just exploding to the upside. And this is telling us very, very broad-based rally in the United States when this one's moving. And now I'll get to the SPX. There we go. Look at that. Nice double bottom there. Spikes down. Couple of hammers. W base. Breakout. Retest this 50-day average. Exploding to the upside. Now testing 2,000. Clears 2,000. This 200-day average here is around 2018. Up here, this old support line around 2040 to 2050 area. Here, yes, it's getting a little bit overbought. May need to work its way sideways a little bit. But overall, underlying trend building up out of a strong base. We'll show the Germany and the UK as well. Look at the Germany 30 here. Left shoulder, head, right shoulder. Massive head and shoulders base forming in this. Starting to break out, bumping up against the clear to first resistance here. Holding very well supported above this 38% retracement level here. Bumping up against the neckline, a longer term Fibonacci level, 98.95. Going through that, 10,000, 10,050. And that would complete a head and shoulders base. Also a very strong base building pattern. And finally, we'll wrap with the UK 100. Here, again, positive divergence, and lower low is not confirmed, and this is just also starting to drive back upwards here. Has broken out over 61.25, testing 6,200. This up here, 200-day average is 6,300. So we don't have as much data this week, but we do have a lot of speculation around central banks. 3 big central bank meetings, of which the main one is the ECB is number 1, and we have Canada and New Zealand as well. We do have some Fed speakers through the week, so we may still see some speculation on what the Fed is up to as well. And one final chart I'm going to show, and I would be quite remiss if I didn't do it, is gold. Gold here is having a spectacular day. Look at this. It had this massive rally here, big symmetrical triangle, breakout from this triangle, blasts through 1250, clears 1262. This is a very interesting day here. The breakout has not been confirmed by the RSI. The RSI is overbought as well. You'd think it would get hammered back, and it did, but support kicks in at 1250 and is taking you back above 1262. So this resistance level here has become support. This resistance level here is becoming support. So you're looking at so far a breakout, although this is getting close to being a spinning top, and still makes me wonder if the bulls and bears are coming into balance here, or if this is going to be a confirmed breakout. This resistance here is 1280, then 1300. If you start clearing this 1282 Fibonacci level, that would confirm an upside. If we slump back, would drop us back into this range and suggest we're in for a correction. So it's a little early to say on gold, but there's a lot of action on gold. Gold's been really moving and is likely to be quite an active trader this week.